Today we're going to look at the UK housing market and house prices in general. Now, joining me in the studio today is John Glenn. Now John, it used to be said that you can't go wrong with bricks and mortar. Is that true anymore?
Broadly speaking, Steve, that's correct. As long as we take a relatively long-term view of our ownership of property, then we're likely to get a very reasonable return on our investment.
So that sounds all very good, but we're not going to return to the heady days of the 70s, the 80s, the 90s.
I think what you're talking about there, Stephen, is returning to the heady days of bubbles in our property markets. And frankly, that's probably something that we don't want to return to. What we'd like to see is a situation where, first of all, we have a housing market that provides us with the housing services that we require in those parts of the economy that we require them in. And secondly, that those house prices appreciate over time so that we get a reasonable return on our asset.
Now, house builders have had a pretty rough time over the last 12 months. Is that likely to continue?
Well, it's still the case, I think, Stephen, that we need to go back to the fundamentals in the UK housing market. It's only 3 or 4 years ago that we were being told that there was a fundamental shortage of supply in UK housing with respect to what our demand was likely to be over a 5 to 10 to 15 year period. So for those house builders who are committed to the market, for those house builders who've been in the market for a long time and understand the market, opportunities will start to re-emerge. There is a demand for housing out there that needs to be satisfied, and essentially we have to get back to, if you like, a steady state in the housing market.
Now, given the poor state of the economy, some people are pointing to all the foreclosures in America or looking at the empty housing estates and the drop in prices in Ireland. Are we anywhere near that sort of position?
Well, I think with the United States and with the Republic of Ireland, you have to take into account the issue that the market was grossly oversupplied at the point that the market crashed. And indeed, one could argue that's almost the definition of why markets crash, an excess of supply relative to demand causing prices to fall. So what we're seeing in North America and the Republic of Ireland is a situation where the slack in the market, the excess supply, has to be consumed by the market before you see the market returning to more normal levels of activity and prices starting to both level out and then appreciate. In the United Kingdom, I don't think we're at that point. We didn't have as great an excess of supply in the market. I think over the last 12 to 18 months, the majority of that excess supply has been consumed, and indeed we've seen prices in the first half of this year start to recover.
Now, some people are saying the mortgage market is so tight that, you know, if you're a first-time buyer, then you've had it. You're never going to be able to afford it, and mortgages aren't available anyway. In fact, some people are saying you'll never own your first house until you're in your 50s in future. What do you think of that?
I think, again, we have to take a slightly longer term perspective. In the short term, it is the case that there are issues about the bank's willingness to lend, and the banks are being much more prudent in terms of who they lend to, and therefore the conditions that first-time buyers are finding attached to any mortgage offer are significantly more onerous than they were maybe 3 or 4 years ago. Although I think it's the case that as the banks become more confident, as the banks themselves recapitalise their balance sheets, you'll find more funding coming back to the market at more favourable rates, and indeed the market will start to compete for the business of first-time buyers.
What about social housing? There seems to be quite a shortage of social housing, and that seems to be likely to get worse.
Yeah, I think this is probably one of the big issues that has not received the amount of press that it should receive. I think the comprehensive spending review that's coming out today and the trailing of that with respect to social housing is suggesting that the government is actually going to reduce its spend on social housing at a point in time when you could argue that it should actually be increasing that spend rather than reducing it. That said, the government is banking on the private sector coming in and filling the gap that publicly funded social housing will leave. My own opinion is that there may be a lack of fluidity with respect to the private sector filling the gap that has been left by the public sector, and that could cause a real problem in the housing market.
So, in summary then, if you were to look ahead over the next 5 years, what's the outlook?
I think that what we're going to see is a return to what I've termed steady state in the housing market, where we see a normal rate of appreciation, maybe somewhere between 5 and 10% a year. Over the next 12 to 18 months, we may see house prices rumbling along at the bottom, slight depreciations, some appreciations. But generally we'll have a steady state, a non-bubble housing market, which I think is incredibly important. But again, we have to be very, very careful here, because we will see geographical fluctuations around that average rate of growth. So there will be some markets, most obviously in the southeast, which may record higher rates of appreciation than other markets further away from London.
John, thank you very much.
Thank you.